obviously we're looking at TradingView here and we're looking at the NASDAQ. So what is it that you are generally looking for in the charts that really, where is it that you go from here?
So typically I would use previous day data to frame my trades for the next day. So in this case, I would always start out with a daily chart. Okay, so I don't take all of this into consideration. I only take the previous day. So let's say this one, so Friday, the 8th of November. So here, where I would draw out, I would always draw out. I'm going to unhide the drawings now so that you can see what I'm talking about. I marked out Friday's high. Here, I marked out Friday's low. And I also measure 50% of Friday's range. I then hop down to the 5-minute chart. So we can see that there's a gap when today opened. And I love gaps because I think that for me, that's the easiest way that I can frame a trade on a Monday. If I typically try to avoid Mondays because sometimes it's just very choppy and I don't want to get stuck in that. But because today we have the gap, so I frame my trade based off this. My first trade is based off this gap. Based on my observation, I always see gaps get filled. Yeah, based on back test and things like that. So for today, we can see that price has just literally bounced up and down and trade above Friday's high. Let me also preface that I only trade New York session.
Okay, which obviously for you is a commitment because of the time. So I think that that's absolutely a factor that should be explained.
Yeah. And also, before I begin, I only use 2 indicators. One is the sessions, which just divide up the sessions for me.
Right.
And the other one is fair value gap indicator. As we can see here, I'm going to turn this off first. Okay, so we see New York open. I typically start looking at the charts at around 8 a.m. Eastern time and just see where I'm going to go from there. So today my target was this gap. So my initial trade that I wanted to take was obviously a short, and the target was the gap.
Was filling pretty much almost the complete gap.
Yeah. I typically never go until the edge of the gap because I want to ensure that it does take profit.
I love those balances right there. 3 ticks away, man.
Yeah, I would hate to be like a takeaway. Yep. So how I started today was I like to look at also liquidity pools, and I use equal highs and equal lows a lot. So how I framed this trade was, as we can see here, we have equal highs from Asia.
Right.
We draw that out. Okay. So let's say this did not happen yet. So I'm waiting for these to be taken.
Sure.
We have another equal low here, but as we can see, it was kind of already taken here. So I'm not focusing on that, focusing on these. So I see these equal highs taken at 8 a.m. And now my confirmation for the sell is not just that these are taken, but I do have to wait for some sort of break or an engulfing that looks that it's going to go down.
Right.
So here we can see that it's been taken. So I wait for more confirmation. We can see that there's an engulfing. That's my second confirmation. But obviously I'm not just going to sell here. I'm going to wait for one more confirmation, whether that be a fair value gap or a fail to break the most recent previous high. So for me, I waited, and as we can see, price just fell here. It went up, and my confirmation to take this trade was this recent high here. As you can see, price failed to close above this recent high. So I took a short here and targeted here.
I think it bears mentioning, because we talked about it before the show, that is an incredible risk-reward ratio. You have such a tight stop and such a long target. And what is the ratio on that one?
So this one is 9.7.
9.7, so almost 10, right?
Yeah.
So there's a lot of simplicity in what you're looking for. You got confirmation 1, 2, 3, pull the trigger, so to speak.
Yeah.
Right. And because you've done the homework ahead of time, not just waiting for the chart to just give you a signal or a trigger, you know where you're going. I love seeing this dynamic because, I mean, is this a pretty typical RR for you, or is this particularly high, just happened to be a good day for it?
Typically, I would aim for just 40 ticks, and my stop loss can range about 20 to 40 max ticks.
Okay.
I like to keep a really tight stop loss. I don't mind getting stopped out because I can always, re-enter and try again.
What prompted you to go for more than your typical 40 that you clearly did today?
I already had the conviction that it would have filled this gap.
Sure.
And that was like my main target.
Mm-hmm.
So at 40 ticks, I moved stop to break even. And then when it went a further 40 ticks, meaning I was in profit 80 ticks, my stop went to 40 ticks in.
Okay.
And I just let it.
You're trailing as you go. Is that pretty typical for you?
Yeah, I always trail my stop. So my typical risk to reward is I always aim for at least 40 ticks.
Okay.
And once I hit 80 ticks, then my stop will move so that even if it comes back up, I still get my 40 ticks.
Right.
Yeah.
Now, position-wise, you're obviously factoring in a trailing stop to ensure that you're not in a position where if it goes deeply in your favor and comes back to 40 ticks, you're in trouble, right?
Definitely. I would always trail it every 40 ticks, 80 ticks, and then 120 ticks, and then so on and so on.
Okay, perfect. That definitely makes a lot more sense in terms of that risk management and making sure that you're good there.